Hello traders, Steve Ganz here, and welcome to the weekend update for May 25th, 2024, Memorial Day weekend here in the States. And I want to take a run through our current open positions. Now, this was a fairly good week for these positions, and I'll just give you a rundown on those. So this one was our class trade. This trade had been down significantly, and I ended up that I put a calendar out here on this trade, and that calendar finally started to decay and put some, I don't want to call it profitability back in the trade, but some loss reduction back in this trade. This trade had been down over $1,000. I did take the calendar off here on Friday, basically turning this trade into a no-lose trade, but it's essentially a scratch. This thing had been adjusted quite a few times over its 51-day life, and now it's just acting as a hedge. If we do, in fact, get a 150-point pullback or so, this thing is going to provide some significant value, but I'm not really expecting that to happen this next week. So basically, this one was able to be clawed back for a scratch. The Apple trade at one point, this had been down significantly. It had been down somewhere in the neighborhood of $4,000, something like that. Again, it was a big down move in Apple, one of the largest moves Apple has had to the downside, close to 10%. And this goes back over a month ago when that happened, probably closer to 2 months ago when that happened. And been able to adjust this and kind of claw my way back since that happened. So these two trades are like an exercise in resilience, for lack of a better term, and how you can adjust trades and turn them back into profitability or mitigate loss in them. And that's part of trading. Unfortunately, everything doesn't always go as we would all expect. Now, this one right here, this is the DJT, no lose butterfly. It could potentially lose a small amount right now. Just ignore this particular number right here. That's meaningless because you can see that shows the T0 line way down here. And basically, the worst case scenario in this trade at expiration right now would be a loss of around $93 or so. When I put this trade on, had I left it totally intact, there would not have been any downside risk of loss. Worst case scenario is if DJT tanked to zero, this trade would have made about, I think it was $60. If it went to 1,000, it would have made about $60. And then we had a chance of making some money here under the tent in the meantime. Now, the reason it could potentially show a little bit of loss right now is as this sold off, I took 2 of the call spreads out of this trade when I can buy those back for a little bit cheaper amount. Part of the reason I did that is if I do get assigned on short calls, I found out after entering this trade that there is an additional fee being charged by the broker for being assigned on short calls. So if that were to happen, I wanted to diminish the number of short calls I could potentially be assigned. So that's the reason I took 2 of those 10 out of play. And in doing so, I did interject the possibility for a very small amount of loss here to the downside. So we'll see how this plays out over the next week or two. I may attempt to adjust this in ways that might open up this downside a little bit, but it's too early to tell, and the bid-ask spread is so wide on these particular options that it's also the best way to deal with wide bid-ask spreads is you float a price that you're willing to accept or willing to pay, and if you get filled, great. If you don't, then you leave it set. And that's where I'm at on this. I do have orders out there to thin this trade out, and we'll see if any of those hit as well. So this trade also a little bit of exercise in resilience. It's been adjusted a few times in the 10 days that it's been opened. I say a few times. Actually, I believe there are 2 adjustments to this. And it's holding up well. It's in a good zone right now. I did widen out this upside as the market was moving to the upside. Then, of course, we got a sizable pullback. I held off on adjusting that trade for more downside risk. Glad I did. And I did that based on a little bit of technical analysis and looking at the pullback in the market and making an assessment that I didn't feel there was a lot of additional downside. I'll walk through that technical analysis here in a moment. But again, glad I did not readjust it for downside, at least as we sit here right now. So I like where this position's at. I think this is positioned well right now. This was a brand new trade, just entered on Thursday. And this is holding up just the way I want it to. So nice big butterfly, lots of potential theta decay under the tent here. And then this does have a long call associated with it. So if the market on rut, in this case, does rip up, that long call, at least early in the trade here, will help hold up the value or the profitability of this trade. Now, as time goes on, the T0 line is going to mound up under the tent here, and it's going to dip outside the tent here. So the further we get into this trade, I may need to find ways of adjusting this to make sure that this T0 line holds up outside of this tent. And then this trade, the 6-7, the June 7th trade, this trade has also been all over in its 30-day time frame. And then one of the more recent adjustments on this was, in fact, to move it from a butterfly that was way down in the, I think it was a 4,900 or 5,000 range, converted that butterfly to a condor. And of course, in this particular position right now of a condor, it is decaying very nicely. I did thin some of this out here late in the day on Friday. I'll look to probably thin a little bit more this next week or possibly close this trade. It is up nicely, 23% at this point. And that's a pretty good return where it sets right now, given the amount of adjustments that was in this. And on every one of these trades, those of you that are members of the alert service know that you can go look at all of the trades that got us to where we are in this. You can see my opening video, why I opened the position the way I opened it. Then you can see any videos about the adjustment, why I chose to adjust it the way that I did adjust it. So many of these will provide some great lessons in adjustment. So again, go back to those circles in the community and just go back in the list of all of the events that took place on each one of these trades, and you can see the video, the order I put out, and exactly how the adjustment occurred. So this is really what I want people to pick up on, is the learning aspect of this, because understanding how to adjust options positions is really the key to being able to succeed. And while it's been a little bit challenging here over the past few weeks, this is where we learn. This is how we learn. This is how we get those lessons that will help us in the future, understand the positions and deal with those positions in the future. So while it's been a little bit of a challenge over the past few weeks, this is where and how we learn. So let's pay attention to those. Now let's get into our current market and take a look at SPX. So so this is RUT. Let's go to SPX first. So SPX has had a bit of a wild ride here over the past week and a half, something like that. As I had mentioned in last week's update, as we had broken out, this had been our prior high. We had this big breakout here. I said at the time, we need to see what that's going to look like, how that's going to hold up. My expectation was that we would pull back during the course of the week, that we would pull back to that breakout line. And we did that almost to the point that we pulled back right to this line, which had been our prior high. We pulled back there on Thursday, and then on Friday we started to rally again. So we'll need to see how this plays out, what happens from here. So my expectation is actually, while I do think we're still definitely in a bullish mode in the market, I would like to see a little more what they call backing and filling, maybe a little more pullback into here. I would have liked to have seen this bar come down into, the middle of this Fibonacci range, basically, or maybe down here to the 5,200 mark, and then start to chop sideways and back up from there. To me, that might have been a little bit healthier for our market than to have a big gap like we had here, and then just a pullback to that gap. We didn't even really fill this gap. But regardless, so if we end up rallying back up, right now I feel like there's a fair amount of resistance at this 53/4 range. So if we do rally back up, I'm expecting a little bit of resistance in that 53/4 to 53.50 range, probably a little pullback back down here in the 52.50, and then probably a more firm rally up from there. That's my read as to how I think this might play out right now. The other possibility is if we do break below this 52.50 mark, then I think we're coming back down probably to the 5,200 or so. But again, our positions are all set up to handle this type of range. If we bust way out of this range to the upside, way out of this range to the downside, there's going to have to be some adjusting that's going to have to take place. But for right now, I think we're in a good range on those for SPX. If we take a quick look at SPY, and again, I look at SPY because we can see volume here. One of the things that I notice is on the down day still, our volume is spiking a little bit more on the down days. That's a little bit of an indication that weak hands are holding those positions. By weak hands, shorter term traders that essentially had bought somewhere down in here and that ran up on them, and now they're looking to potentially take their profits to lock in the gains that they picked up during this period of time. And so when things start to go south, those people tend to bail a little bit faster, and that's why you get these taller bars sometimes when you start getting into down moves. So a down move with a little bit higher volume can be an indication of a little bit more weakness yet in the market. So that's on SPY. Let's look at VIX, which is going to be the volatility of basically the S&P 500. And our VIX had made all-time lows here this last week. But then it did start to pop up a little bit, but it didn't pop up a lot. Even on that down day we had on Thursday, VIX didn't really pop up that much. It went from an all-time recent low of around 11.5 up to 13 and a quarter. But then the very next day, VIX just dropped right back off again. So from a volatility standpoint, the market's kind of telling us, no fear here. Let's not freak out. So that's more to the bullish side. So right now I'm feeling, as I told you as I walked through the chart, a little more bullish. Doesn't mean we can't have a little more of a pullback, but I think we're still definitely in bullish mode. Then if we come look at RUT, so I also mentioned in last weekend update that I felt fairly sure that this resistance was in fact going to push the Russell back lower, and I was expecting that it might push it back about halfway between this yellow line and this red line, and that's about where it came down to. And at this point, I would pretty much expect the RUT to be trading between this 2038, probably up to this 21, a little over 2100 range. So nice range on RUT. So even if we came all the way down here to 2000 and then up here to 2100, if we come and look at our trade here, 2000 to 2100, so 2100's all good, 2000's all good. We're in a good range, or a trade that can handle a pretty good range, the range that we might be expecting at this point. So at the end of the day, for the most part, I like the positions as they're existing. I think the read on the market right now with the general ranges we're looking at, I think that's all good stuff. I think it sets up well with the positions that are currently here. So one last little thing to add, I'll be putting out a little more information on this over the weekend, but something I'm planning on adding to the community, to the alert service. I've had a number of people reach out to me about doing the wheel trade. And I think most of you have probably heard of it or have some basic familiarity with it. But the wheel trade is a way to trade a longer term position that you might want to get into, more of an investment. So I'm actually going to add over the next month or two, 1 or 2 wheel trades that we'll also be doing in the community. And I'm going to go through the entire process on the wheel, the process of how do I select a specific stock that I want to do the wheel on? What are the criteria that I'm going to run through in that? How do I do a fundamental analysis on a stock that I might want to own? What are the things I'm going to look at in something that I might want to make a longer term investment in the wheel? Now, wheel is not active trading. It's basically going to be doing one option trade a month, and then depending on how that particular option trade plays out, whether I sell put and ultimately get assigned that particular stock, and then once I get assigned the stock, then how I go about selling calls against it. So it's not a quick, fast process, but I'm going to walk through the entire process, and it will be an additional trade that I'll be adding into the service. So those of you that are interested in that have reached out to me, you'll have kind of a new piece to this puzzle that I'm going to add. Those of you that might not be part of the service right now, I'll put a link down below so that you can take a closer look at it and see if this might be something of interest to you if you're a longer term investor or a brand new options trader. This particular trade is a really good trade for people to start cutting their teeth on if you have something that you're looking to make a long-term investment in anyway. So I'm going to wrap it up here for right now. Thanks so much, everyone, and have a great Memorial Day weekend. And you'll be seeing me in the community next week. Take care.